This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Friday, May 15th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here, July corn down 5 3/4 at 461 3/4. July soybeans were down 12 1/4 at 1180 1/4. And July Chicago wheat was down 10 at 648. This morning we had an export sales announcement, 155,000 metric tons of meal to Italy for 25. Notebook crush will be out at 11 o'clock Central here today. They're looking for an estimate close to 214.030 there. So we'll take a look at that. Also, now that meetings have wrapped up in China, markets, obviously showing us that they were looking for some semblance of a big deal. We've got a lot of rhetoric out this morning on buying billions of dollars of soybeans and ag products, and given, so I think there's just a whole bunch of mixed signals that are coming our way. So I guess with that, Dustin, after yesterday's reaction, follow through overnight, what are your thoughts here as we wrap up the week?
Yeah, thanks, Dan. Yeah, I think the market is saying, show me, right? Like you just look at what's happened. I talked about this in the letter last night. Over the course of the last, 12 months, there's a lot of hype about how much China's going to buy, and then they slow play their purchases. So we've had these big roller coaster moves, especially in beans, where market gets really excited about the potential, and then it's slow. It's not like the phase one trade deal where all of a sudden they flipped the switch and they started buying heavily. We need the market, I think, needs to see that at this point to some degree, especially if we're not talking about very specific quantities and seeing almost like an immediate response. The bulls need to be fed. Not saying they can't turn. I mean, the market's got a mind of its own. I still think the commodity inflation story may be a bigger thing that gets overlooked in this when we're all looking for China for demand. We still have, energy's up again. We're up $2.60 overnight to 104 on crude oil. If we that JP Morgan report, if we're in the lower 100s or for some reason go higher than that, I still think that's one of the things that could lead to sticky commodity inflation, even for grains.
Yeah, it's good stuff. I mean, you got interesting enough, gold down $133, silver down $8 here this morning. Stock market's softer. Justin, I just kind of feels like risk off or reevaluation or something. I mean, I don't know that anybody outside of Boeing and GE got a lot out of this meeting. It feels like so far. So I mean, we'll see. But I guess what's your take?
Yeah, I mean, I think like I said, the last few episodes. I mean, I think we were way overcooked going into this period, and it makes a lot of sense to me why we're breaking. I think we're going to have a tough. Personally, I think we're going to have a tough go of it the next 30 days, and weather's going to be good, all those kinds of things. The crops are going to start growing, things are going to look decent, all that kind of stuff. I think it's just going to be a tough long for a period of time. I think all those things that, Dustin talked about, I do think those are tailwinds, and I do think those are, underlying support, medium. I'll call it medium term. I think short term, record longs, sitting here not getting paid, underwater in 2 days. A lot of buying happened, and most of those longs are underwater. So I think it's just going to be a tough long, personally. So we recommended buying a bunch of puts. Not trying to be smart. We were lucky on timing and everything. I just think it's you gotta have protection on for the downside. And then if, these things change quick, to Dustin's point, you could have new headlines out, but saying that China's going to buy billions of ag, they already do buy billions of ag. So if you're record long, beans are coming off of 2-year highs. So we have to take a step back and be like, what do you want the market to do? I mean, obviously we all want it to go higher, but we're not selling much at this price. We're not competitive. Funds are ultra long, so they've helped the price get here. If they decide to get out because there's, better returns in the stock market, which obviously there is, like, you can't rule out that they decided, screw this, I'm out, I'm getting into something else. Look at the moves that we've had in, precious metals, to your point, Dan. I mean, silver's down $40 an ounce from the highs, and it's still at 80. But these moves are violent and really, really big. The money flows quickly from one thing to the next. So you love them when they're on your side, but if they decide to go the other way, you're going to hate them. So I think you have to get some protection on, and if you're bullish, that's fine, but have something on that you're not going to be forced to sell a really big break from here. And if we have a big rally, great, and now it's all weather and what the funds decide to do.
Yeah. And you bring it up. I mean, from your perspective, I mean, I think it looks like the next 12 to 15 days, I mean, they look pretty non-threatening,
It's just the time of year. This happens every year.
Yeah.
You eventually get the crop planted, and then it gets nice out, and then it starts to grow like, oh my God, we have a crop. Like, so it's just a tough time. I mean, this is why we have seasonals, right? And if the weather turns bad, June or something, like, then, we have a bull market or something, but it's just a really tough time of year to be just long and waiting for it to go up, especially with all the rhetoric we had going into this period.
Yeah.
So
when are we gonna stop being duped by these things, Justin, and become self-reliant? You've made that point all winter. I mean, like, we literally, it feels like a lot of people put all their chips in on some sort of an announcement this week, and it just blows my mind that we did that.
Yeah, I mean, my personal belief is that, I think E15, some of these domestic policies we have to continue to build, and, icing on the cake would have been, a short-term, trade deals. But the fact of the matter is that, South America continues to grow. Our slice of the pie continues to go down on the export front. And honestly, it's going to always be tough to compete with them. They just have a lower cost basis. So, obviously crush, like soybean crush, obviously we're doing the job on that. Hopefully policy continues to support that. We're seeing record crush. We have crush margins in beans at $3.50 a bushel.
Crazy.
We're crushing as many beans as we possibly can. And I hope that continues, because to depend on China, who has an aging demographic, which we've seen that they were overstating their population by 100 million plus, right? So I think their demand's maxing out, right? You can argue that it's going to start declining, because A, the population, and B, because they're, super hot ration, which means that they had a really high meal in their feed component compared to like what we have here. So they've started rationing that down to kind of a more normal ration. So their bean demand it's going to be 100 million, 110 million, somewhere in there. It's not the, exponential rise that we saw while South America was increasing theirs production, but now South America keeps increasing their production, and China's not, keeping up with that pace. So unless you're going to get India to decide to start eating meat, which, doesn't seem likely, or some other country that's going to start, having exponential growth, we've just got a potential oversupply problem. So none of that's gone away. We like to kind of throw that, kind of forget about all that stuff, but, unless you have some serious weather problems or anything, that's still the underlying problem.
oversupply.
Well, beans for sure. I mean, I think, corn, you look at the global corn balance sheet, I think it's pretty friendly. But, beans is just it's a tough one. I don't know how you look at a bean global balance sheet and be super bullish about it. Right? I think all the bullish attitude's been because China's going to just buy a bunch of our beans because we make them. And I don't think that's, So.
Yeah, it's a bailout almost. Ben, what's on your mind here as we wrap up the week?
I think that everything looks vulnerable from a technical perspective. And we're sitting right at levels that we held the last time down. But you can't lose sight of the bigger picture. Your 200-day moving average in July beans is 11.30. It's another 50 cents. Could we get there? Absolutely. Corn, a little bit more traffic, and I think the break will be a little more shallow. But July corn 4.55 on the 200-day, and December is all the way down at 4.66. So we've come a long way. Looking at last week, I think pretty disheartening the day when we had wheat up limit in front 3 months of Kansas City, the front month of Chicago. Corn was nibbling at its highs, and they couldn't recruit more buyers. Kind of felt like that was a little bit of the canary in the coal mine, and then not getting anything concrete out of the Chinese meetings has put up, I think, quite a few longs underwater. And the market, to me, feels like it's vulnerable from a liquidation phase. We seem to have overnight kind of separated ourselves from the crude oil market. Momentum traders, they can find that easy when it's working, and they keep pouring in. But I think there's a pretty hefty long here that may have a little bit of a reckoning, which I think would be great if we could get that, into late May, early June, and give you a chance to maybe own some cheaper protection for potential weather issues. And you look at, and this is not tinfoil hat drought mongering, but if you look at the U.S. drought map that was on the War Room report yesterday, the only place in the U.S. that's not suffering from dryness is the grain belts. All those things in the back of your mind, it's just the seasonals, I think, here, and feels like we kind of shot our shot for the minute. And I think it's going to take weather or something, a major escalation in the Strait of Hormuz to get corn and soybeans with some footing underneath it.
Yeah, and to that point, Ben, I agree. I think, even if the war continues, all those things, I think those are out forward 2027. I think the spreads, I think the spreads are kind of telling the story. July noves making new lows. You start widening these spreads out, and I think any kind of friendliness continues to be out forward.
Yeah, I just when you kind of do your contingency planning around markets, and certainly we have a long way to go to get there, but I think that there's still a lot of old crop that has to be purged. And I think heading into the fall, this could be one of those years that we see right into the teeth of harvest kind of rally, particularly in corn, because I do think we'll lose some acres on the June planning report. So if everything were to go kind of status quo until then, with no big weather, no big weather upheaval, I'd look at that area or that time on the calendar as a place where you have to really be open-minded what the next 6 months look like, with the Southern Hemisphere farmer having to go to plant with potentially exceptionally high fuel prices, high, if you can get them, fertilizer, and the U.S. crop coming on. We could be, I don't want to say the only game in town, but we may be the lion's share of that for the world. So I think that becomes a really interesting period.
Very good. Appreciate those thoughts, guys. That was good. Ryland, let's quickly move over to livestock. Still very unclear on these on this renewing of import licenses for China. Seems like somebody might have jumped the gun a little bit ahead of talks. So that's going on in cattle, and then you got pretty good bear spreading yesterday in hogs. I guess maybe take us through that a little bit.
Right. Yeah. I mean, the confusion continues. So I think we'll just try to let the dust settle on this one before, we have anything concrete. It just feels like the renewal of those beef licenses definitely, was encouraging to start, but then the market just did not hold on. I mean, we are getting prices. Futures are back up to contract highs almost. We hit the highest level in June since May 1, since the new contract high, and the cash market is still just creeping higher here. I shouldn't say creeping. I mean, we were trading 265 in Kansas yesterday, a little 415 in the north from what we're hearing. So it's about 3 to 5 higher on the live and about 7 to 12 higher for the dressed. So futures still seem a little bit reluctant just to chase here. I mean, a lot of the time seasonally, we do kind of reach that seasonal cash high at this time of year. So I think the market's being excessively cautious right now. I mean, obviously supplies still extremely tight. We're getting a lot of back and forth from the administration. I think the market is just trying to figure out how to digest it all over this past week and see if it even makes a difference in the end at this point. So it was a little disheartening to see things couldn't really hold on, but on the other hand, the cash market is just too strong. So I just imagine that we could see a little bit of cleanup, maybe a little pressure before the weekend, just on some profit taking alone. And on the hog side of things, mixed close deferred contracts still doing really strong. I think that's where the big support is right now. And, we just didn't see the cash gains really hold. And I think that's a good reason to see this bear spreading. It just seems like a little bit more optimism or caution just getting pushed out a little bit further. We're not seeing a big uptick here that we would probably like to see before Memorial Day. But cash market, is kind of hanging on a little bit, but overall just kind of felt like, the down yesterday just kind of soured the experience overall. So just waiting to see, carcass kind of pick up here a little bit. I mean, loins were up a little bit yesterday, but just not enough to really get anybody whooped up. So I think it just, there's more of a wait and see mentality, see where we go from here. I mean, obviously producer margins still really strong out in the back. I think that's something that everybody's kind of looking to take advantage of, especially at this time where we're starting to get into peak demand time frame. So I think that's something to be pretty cautious of going forward.
Appreciate the update there, Rye.
Sorry,
Brian,
not to cut in.
Go ahead.
Just to show how much these markets are moving around.
Yep.
So when we opened, meal rallied $12 a ton.
I see that. July's up $6.
Yesterday, an interesting thing too. Yesterday, May, July meal, so it was the last day, right? So it's gets kind of wonky there, but traded $25 a ton over after being close to full carry. Ooh. So kind of an interesting thing. Crush margins are up big again today. So again, just massive moves. I mean, $12 meal rally from the open, like in the first 5 minutes. Now it's set back about $4 from there, but
wow,
volatility.
Yeah. Oh yeah,
volatility. Bunch of bulls in a china shop, right? Just running around and
bunch of little Rylands running around.
Just a ham in the fridge.
Ham in the fridge. I knew it was coming.
Don't worry about it, people. Don't worry about it.
Hurry, Brian, before this thing gets.
Happy Friday, everybody. Yeah, with all the leaders being in China for the meetings, I went down a rabbit hole. No pun intended. You'll understand why I said that in a minute here. So I went back to 1807 when the leader Napoleon was so ecstatic about how well he did ending the war between the French Empire and the Imperial Russia with the signing of the Treaty of Tilsit, that he planned to hold a rabbit hunt to celebrate this historic event. His chief of staff, Alexandre Berthier, oversaw the hunt. He acquired over 3,000 rabbits from local farmers, enabling Napoleon and his party plenty of bunnies at their disposal for the festivities. Little did Napoleon know the tables would turn on him and his guests rather quickly. Berthier, not knowledgeable about rabbits, when the cages set at the edge of this huge field open, the animals bombarded Napoleon and his party. These domesticated floppy-eared rabbits were not scared of humans and believed it was feeding time. So thousands of rabbits ran towards Napoleon and his men, searching for these tasty morsels. According to historians, thousands of bunnies strategically divided into two parts, flanking the French leader and his guests. At first, the men thought it was kind of comical about this onslaught, but it didn't last long. Rabbits were like swarms of bees, gnawing and their buttons on their boots and jumping into their chests. Napoleon could not position his weapon to shoot these properly, so he retreated and ran into his imperial coach for safeties. These rabbits did not relent. They chased Napoleon and continued attacking. Some even made it their way into his coach. Yeah,
It's like a sci-fi movie.
Yeah, it's crazy. Humiliated and stunned by the events, Napoleon was driven far away from the chaos. If only his chief of staff would have bought wild rabbits, they would have actually run away from the men, and the hunt would have been a success. Berthier survived the chaos, but a day before the Battle of Waterloo, he was either pushed or jumped out of a window. So that was interesting how that all ended up with his chief of staff. And then I believe we actually have a pic of Napoleon being under siege.
Of course we do.
Seems like they needed a holy hand grenade.
Yeah, it's too bad he doesn't have
I
a
want
hand in
that.
the fridge.
I want that hat.
That's a
Happy
terrifying
Friday,
image.
everybody.
And Ryland lost his headset in the fight. it looks
Wow.
like.
Oh wow, that's got to be a
Right.
first.
You took a day
The
off.
rabbits ate it. Yeah.
Oh man, good stuff, Bri. Appreciate that. We needed it this week. You heard it referenced a number of times. The War Room Report. Check it out. The link's in the description. Gives you a deeper dive into all the things we talk about daily here on the War Room, as well as access to our premium content, USDA reports, things of that nature. And a portion of those proceeds directly go to support the AgYield Next Gen Foundation, which of course supports our national scholarship competition. We've got our first 5 winners here this season. Very excited about that. We will be celebrating them with our first annual AgYield Next Gen Foundation golf outing on July 27th. Still a couple of registrations available there. So if you'd like to come meet and mingle with the team here at AgYield and industry folks and meet the scholarship winners, it's going to be a great day at Aurora Country Club, July 27th. Give us a call. We can get you registered and help you with all the info there. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great weekend, and we'll talk to you again on Monday.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield Next Gen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.